I'm going to bring my 7 years of trading experience and I am going to be fully transparent and you are going to get the best insights and I can guarantee you this. Hey everyone, welcome to today's YouTube live. This is Suleiman from Prime XR and I am super excited to be here with you guys for the next 15 minutes because today we are diving into something every trader needs, how to spot high probability setups in Forex. Whether you're brand new or already trading, this is for you. In just 15 minutes, I will show you one simple, powerful setup that you can start practicing today. Plus, we will do some question and answer. You can ask the questions in your comment box and you can drop your question in the chat. So just give me a quick favor that hit that like button and subscribe so you don't miss our next live. All right, let's get into it. So today we are keeping it simple but powerful. We will focus on one setup that will be trading at support and resistance with candlestick confirmation. This works because it combines market psychology with clear price action. So now I am going to share my screen and we will go with trading maybe because most of my students likes to go with trading maybe it's good educational platform in trading. So let's share the screen. Okay, guys. So the first step is that we have to identify the support and resistance. Now, what is support? Where the buyers come in and they push the price to the upside. If you see this place, it is a nice support. The price is going up, nice support, nice resistance because once support breaks to the downside, it becomes resistance. And then nice support, and nice support. Here is the point that when the buyers comes in, they push the price and the sellers become weak. The same opposite is the resistance, where the sellers come in and they push the price down and the buyers become weak. So if we see the prices from here, resistance, 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 and resistance again. So I will remove all these and we can put a horizontal line to get a clear support and resistance. So for example, if I'm looking for a nice support, this is a nice support place. You can see we are tapping 1, 2, 3, 4, 5. So if you are getting 2 to 3 taps, it's a reliable support and you can trade on this. Same on the opposite side, we have resistance like this. See, and this resistance becomes support. See here, this. So now we have a nice range. I don't have to jump in. I have to wait the price to come to my support or resistance, and then I will look for a confirmation. Now, for the confirmation, you can use anything. I personally use pin bar candle. What is a pin bar candle? When the prices go down, the sellers pressurizing the buyers, and then the buyers come in, turning them out to the opposite side. See, we got a great pin bar candle here. This. With a long wick and a small body to the upside. This is a pin bar candle. This is my confirmation to go for a long, to go for a buy. So this is my nice support. I am waiting for the price to come down and it came down to 1.16188 and then I am not going to trade these places. I am sticking to my strategy. I'm looking for a pin bar candle. Now, this is the pin bar candle. I got it. Now what I have to do? I just go with the long option. I will long it. I will put my stop loss down there below or little more you can do. And I will stick to my 1 to 2 risk to reward ratio strategy. So this is my 1 to 2 and boom, we got it. You can use it on any Forex pair, no worries. You can find a lot of pin bars, but there must be a nice support and resistance there. You can align this support with another support like a tangent one. For example, if I see from here, this is also a nice support. See, so I'm aligning. I have more confidence and I can go long. And now I got the confirmation and I'm going up to the upper side. So what are the steps? The steps are the first you have to identify support and resistance. The second step is that you have to go with a confirmation, and that is a pin bar candle. And the third step is that you have to minimize your risk. I will go always go with 1% risk, and I will target 2%, 1 to 2 risk to reward ratio. So now I will look for some questions from the comment box. Okay, someone is asking that what is the best time frame? Okay, see, the bigger the time frame, the more clear the bias is. Once your bias is clear, you trade on that direction, your profitability will be more, your accuracy will be more. You can be accurate like 70%. So I will prefer to go for a daily and 4 hour, and for the execution, you can go with 1 hour. If you are going from 4 hour to 1 hour, then for the execution, you can use 15 minutes. I personally prefer 4 hour and daily. But for the execution, yeah, you can go with the 1 hour time frame. Okay. Next question is, can I use engulfing candle? Okay, great question. See, whatever strategy works for you, you can use that. With support and resistance, you can find many candles on supports and many different candles on resistance. I'm not saying that you don't, you direct have to go with this strategy. Just backtest it for like 3 months, 2 months. Backtest it and then go live on a demo account, practice it. If you see the profitability, then you can go with a live account. So the person is asking for the engulfing candle. Yeah, absolutely. You just backtest that if there are a lot of engulfing candle and you see a nice reaction after that and you can get the 1 to 2 risk to reward ratio, you are good to go. No worries for that. You can use engulfing, you can use three soldiers, whatever you want. So I'm personally using pin bar and it's working for me. Maybe it works for you too. Maybe it's not. But trading is not about what works for me and what works for you. You have to find out, you have to backtest it, you have to practice it. Once it gives you results, you are good to go. So these are the three steps: identify support and resistance, a nice pin bar candle, and always risk management is there. So 1% risk, 1 to 2 risk to reward ratio. And then we have one more question. There is, okay, what about 1 to 5? See, again, it's back testing. So if you are going with 1 to 5 risk to reward ratio, it's a nice, you just need two trades in 10 trades to be profitable, or three trades and you can make money. But obviously, you will not find that much big setups every time. So if you are okay with having a nice losing streak, and then you can manage your emotions, you can go on 1 to 5. For example, if I see the same trade and I just increase the size and then go up. Okay, see, 1 to 5. Even we can go 1 to 6, 1 to 7, 1 to 8. But it depends. Like you can target the next liquidity points, you can target the next resistance, or if your daily bias is clear and you are bullish, you can go with that. No worries, 1 to 5 is also nice. But you have to look for the ranges, you have to look for the nice support and resistance, and you're good to go. So now I will stop share. So this is simple, repeatable setup to work across pairs and different time frames. Thank you for joining me. It's been awesome hanging out with you. And for these type of videos, which I will be sharing regularly with full transparency, kindly subscribe to our YouTube channel and social media so you get yourself updated from experts. Hit that like button and drop a comment that what's the one thing you learned today. See you next time, traders.